Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi, welcome to Economics. The moratorium given by the Reserve Bank of India to term loan and term borrowers ends on the 31st of this month. A lot of leading bankers have argued against extending this moratorium, and the Reserve Bank of India also has tried to find a middle path by allowing some loans to be restructured. Yet there is a lot of talk about how after the end of the moratorium, the bad loans or the NPAs of banks will suddenly spike and the health of banks will deteriorate. What exactly is this confusion and what is likely to be the way for Indian banks? We have Professor Ela Patnaik here with us. Welcome back, Ela. We missed you last week, but we have you here and it's good to have you back again. So what is this whole fear and confusion about the moratorium ending this month and the health of the banks taking a further hit after that?
A lot of activity has been stopped because of the lockdown, and not every business is actually responsible for the fact that it is unable to pay back its loan. So the regulatory requirement used to be that if you don't pay back, then you would be a defaulter. And if you are a defaulter, of course, there were various steps, but essentially that if you were not paying, then you were defaulting on your loan. And not just did it affect the person or the business that was defaulting, it also affected the bank, because the bank had to say that these are the loans that have defaulted or these are non-performing loans, and they had to flag them. And then the requirement, the capital requirement would be that they have to hold more risk capital if they have more defaulting loans. Now, given that there was a lockdown, this was something that would happen to a very large number of businesses and would affect a large number of banks. So what you needed was some time, like a breather, like, when you knew you couldn't really return the money, and yet you didn't want to be a defaulter, nor did the bank want you to be a defaulter because their capital requirements would go up. So what was offered to borrowers was a moratorium, where that for this period, it's okay if you don't return your loan, if you don't make repayments, then for this period it is okay. Now we know that as if you look at the other side of what the bank's balance sheet, then on the other side are depositors, and depositors are continuing to get interest on their deposits, and we cannot tell them that there is you won't get money anymore. Many people might be dependent only on interest, like senior citizens and many others who would have some savings and would be dependent on the interest. So you couldn't tell them that there was going to be a moratorium. So in some ways it was a one-sided moratorium which affected banks, as they were not getting in money coming in but did have money going out. So that moratorium is going to come to an end now. And when it comes to an end at the end of the month, the question is, what happens? There will be businesses who may be able to repay loans, start again and repay loans. There may be businesses who may still not be back on their feet. When we look at some of the analysis that RBI did in its financial stability report that was released in July, then we find that this number is very large. There are many sectors that are, affected, airlines, tourism, restaurants, retail, real estate. There are many, many sectors which are affected, and they don't have the ability to start, like that was an off switch, and if you switch it on, then things are supposed to go back to normal immediately. Now that can't happen because COVID hasn't gone. It's not just about the lockdown anymore, but it's also about the present conditions of demand. Both demand and supply are affected. People are not stepping out. And so you need to think of something else. And the scheme that they've come up with, on the day of the credit policy, RBI announced that a one-time restructuring of loans would be allowed for those borrowers who had been regularly making payments till the March lockdown period. Maybe a lot more is required, but that's really the kind of relief that is being given currently.
So, Ela, we discussed this last week also, where some very prominent bankers like Deepak Parekh, Uday Kotak, and even some people in State Bank of India have argued against extension of the moratorium. But the RBI has come with the one-time restructuring for some select borrowers like MSMEs, individuals, and some corporates. But that doesn't make too much of a difference, does it? It is, in a sense, a moratorium. It is, kicking the can down the road.
It might give banks a bit of more flexibility, and actually bankers are asking for that kind of flexibility, that they should be able to judge whether this will be a borrower who can return the loan or not. Mm-hmm. And sometimes there may be people who've actually been defaulting earlier as well, and bankers may choose not to give them a restructured loan. Mm-hmm. Restructuring often means that you say, okay, for 2 years or for X amount of time, 1 year, you don't have to pay back your loan, and that you can defer interest payments for a certain period and defer repayments for a certain period. Now, banks would like to have that flexibility because they know the borrower. It doesn't have to be like a one-size-fits-all, which was a moratorium was a one-size-fits-all, where you could say that, okay, this entire lot doesn't need to pay back. But, banks also have to survive. Now, think of how badly this may affect the health of the banking system. If you think about loans that have been given to airlines, I mean, what are the chances that recovery will happen if you don't do a restructuring, even if these are large airlines? What are the chances that even if you do a restructuring, business will limp back to normal soon enough for that restructuring to actually work? So, banks' health is going to be should be one of the critical inputs into thinking about how you are going to move forward, because it's, on the one hand, you have to help companies. You don't really want that entire sectors should shut down forever, should go bankrupt and shut down forever. I mean, like, if you think about airlines, then if one was to be very harsh, one would say they should all be shut down and sold off, and maybe, we don't need those planes anymore. But the point is that what happens tomorrow when we need to revive those businesses? Mm-hmm. So we need to think about what kind of support we can give them, and what kind of support we can give MSMEs, how can employment be kept up. But at the same time, it is very important to think about, what about banks? I mean, banks, after all, have salaried other people's money. It's money that belongs to people who may not be very well off, who depend on these for their income. Are we expecting that taxpayer money will be used to support the banking system? Of course, bankers would like that and have been asking for it. But what is the fiscal capacity for the government to, put taxpayers' money into the banking system? So, it's a difficult situation, and it has to be a balanced policy. And I think what is being tried is, okay, initially you felt that maybe you need to give a moratorium because, I mean, after all, there's a complete lockdown. How are people going to return money? And after that, you're thinking about restructuring. There's a KV Kamath committee that has been set up, whose job will be to try to suggest how to move forward.
You have mentioned some of the measures the government has implemented or is planning to implement to support business, like guaranteed loans to MSMEs, the moratorium, and of course restructuring. But beyond that, the government does not have any resources to help companies. For instance, there is a lot of discussion in the US, or in the US, where the government has gone and supported businesses, and some kinds of funds have gone to businesses. But India does not have that capacity to do that. So in a sense, the hands of the Indian government are tied.
So they're tied in two ways. The first is that, like when the US government gave money, it was mainly so that companies could keep paying employees. Here, we don't even know who are the companies. So if we were to start paying, we don't even have the data. So a very large part of the economy is in the informal sector. And we don't know how to even reach all of those companies. What are the wages that they are paying? What sort of, who are their employees? And so that's the first issue, that it is a data problem. But the second issue, the second very obvious and big issue, is where is the money? So while it's very easy to say that, oh, the government should borrow more, but as I've been arguing, the borrowing comes from somewhere. So it's not as if domestic savings are getting very large. And yes, to some extent, people would save more and consume less if they can't go out. But when you look at, are their incomes more, that they, even if they save a higher proportion, but it's not that their incomes are going to be much larger, and many people are actually drawing down their savings. You look at the EPFO statistics, people have turned to EPFO, so they were allowed to withdraw from their provident fund, and many people have been withdrawing from their provident fund. So the first question I would ask is, it's not just a question of should the government give out support to companies, give fiscal support, but the question for me would be, who will they borrow from? It's not enough to say the government should borrow from. It's about who, where will the savings come from? And I think one thing that, as a macroeconomist, one just cannot forget is this identity that if we spend more than we save, we're going to be borrowing from abroad. So it's going to be really a lot of foreign borrowing. Are we in a position to do that today? Do we want to do that today? There should be an informed debate. I don't think we should go out and borrow too much abroad, but if people disagree, then they should actually be saying very clearly that, yes, give more support to companies, but how do you give it? You borrow from abroad. And abroad means government holds the currency risk. Very often higher interest rates need to be paid, like we saw for the various NRI borrowings that the government did. Or even if the government goes and does masala bonds through various PSUs, that's another route that is being tried. I think that if you think about macroeconomic stability, you do need to think about how much more do you want to borrow, and what is that source of borrowing going to be. So from a macro perspective, from an economic stability perspective, we cannot simply say, spend more. We have to ask the next 2-3 questions. And that is, I think, critical at this stage. And I mean, I don't think that the government is going on a borrowing spree. And I think that's good, because we don't have those extra resources.
The one other point, Ela, you make in your column, Elanomics, and I would like to tell our viewers that you will find this in the description. Please do read the column. Is about why revival also depends so much on discretionary consumption spending. And obviously people are not spending now. They are holding on to their savings and their earnings. But what can the government do to push consumption so that there is some kind of demand, which will also help sectors? I mean, the sectors you've talked about, like tourism, hospitality, aviation, travel. We don't see any measures there to spur consumption.
Well, I believe that the measures to spur consumption should not be direct measures or incentives to give consumption, but more of health and safety precautions. So testing people, if you were to test those who come in, so suppose you want to boost tourism and you say if they land in a certain place, then we do a test and the test costs only so much, whereas the impact on the economy and the spending a person may do is, let's say a person is going to spend 50,000 rupees, whereas you spend 5,000 rupees on a test, or sometimes people are willing to pay for it. So create conditions, create health and safety regulations, which actually make people comfortable to go out and spend. By now, people want to go out. If you look at what's happened in Europe, which has had a longer lockdown than ours, then this summer, Southern Europe beaches are full of people, because how long can people just stay home, especially young people who are living in small spaces, especially when they go to cities and they're working and they're living in small rented shared apartments. They want to go out. So if we can put in health and safety regulations in place, whether it is related to travel by train, travel by flights, or in hotels or at airports, or more testing and allowing people to actually travel, then and things like that. I mean, I'm just giving travelers and tourism as an example, because tourism is nearly 10% of our GDP, and it is hit very, very badly. And I mean, all of us are dying to go out now. So if we felt that we would be safe, we will be able to go out. So those are the kind of things, rather than direct, I think, incentives for consumption. That's what we should be looking at.
So we are looking at, say, at least 6 months, 8 months, until there is some news of the vaccine, and then the government has talked about a further package of stimulus, and that is when we can foresee what happens to the loans and the restructuring and the health of banks and their NPAs. Is that a correct kind of an assessment, Ila, or are we looking at a longer duration than that?
See, hopefully it will be only so much, but there are fears that it will be longer if during this period the balance sheets of companies and banks get affected very badly. So if they have to continue some sort of operations, but their revenues are very low, they're not making enough cash and get to continue business, they don't just shut down, then their balance sheets will be impaired. And if the longer this uncertainty and the longer the lower economic activity continues, it could be bad. So it's very important how to handle businesses, the economy, the incentives we give, the credit conditions, regulations for banks and loans during this period, because that will determine not just the length of the crisis, but also how much and how good the healthy the recovery will be.
Thank you, Ila. The health of banks is what we will be watching after the end of the moratorium this month, and the next 6, 8, possibly 10 months will be very crucial on how loans are restructured, how the NPAs or the bad loans mount, and how banks deal with this. Please keep watching Elanomics. Thank you for your subscriptions and your payments to ThePrint. For those of you who have not taken subscriptions, I would appeal to you to take subscriptions, as good journalism needs contributions and payments from readers. And thanks for watching this episode. We will be back with another episode next week. Thank you.